Hello, this is Compound Interest Stock Guy. Today in this video, I'm going to be talking about Medipharm Labs, ticker LABS, and ticker MEDIF in America. Then I'm going to be talking about Village Farms, VFF in Canada and America. So stay tuned. This is going to be a report card series, fully robust, fully detailed, giving you legit non-biased info. So stay tuned. I also want to disclose I'm not a financial advisor. This is just for entertainment information purposes. Do not buy or sell based on anything I talk about. Buy or sell after you did your own research, due diligence, and like the investments you're pursuing. So if you're new to the channel, I'd love to see you subscribe. Boop, 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 boop. Give me a thumbs up. I do appreciate it. Then more people can see what's up, what the real info out there in the cannabis space. Just clear, precise, giving you raw information that you're not going to get anywhere else. So, I'm going to get through to this. So, this is Monday. It's snowing outside. So, let's get into this. Medipharm Labs first, and then we're going to get to the VFF. So, I may do a timestamp, but this will be pretty short. So, you can just skip to that if you just want to see Village Farms or you just want to see this. So, let's do this. So, cash and cash equivalents, 38.6 million. They had 42 million last quarter, so they're down on their cash. So, I don't like that. Their trade and other receivables, 27.5 million. It's down. That's the money they're getting from the LPs. They had it higher before, and the inventory is down a little bit. So their assets are 120 million, and that's the total current assets. And then their non-current assets are 49 million. So if you add those together, that's 168 million. All right. So that is what the assets are. Now, if you minus the liabilities, then you're going to get shareholder equity. And I'm going to get to that later on and explain kind of how their shareholder equity is going down. So, property and plant and equipment, 42.2 million. It's up from last. I guess this might be added from Australia or somewhere else where their equipment and all that is more worth more money now. And then non-current deposits, other financial assets, deferred tax assets. So 168.8. All right. So before they had 183 million the previous quarter. This was a financial for the whole year, but it'll show you the 3 months as well. So 20.9 million in payables that they owe. And current employee benefit obligations, loans and borrowings, current tax liability. Add that all up, you get 28.8 million. All right. So now you add up the loans and borrowings. That's 37 million. All right. So they're down on their liabilities. So that is a plus for Medipharm Labs. They had 54 million in liabilities previous, but they have less cash and less assets this quarter. So now we haven't even gotten into the revenues or anything like that, right? That's the real thing, but this gives you a very good information. The total equity is 131 million, so it is up from the last quarter, but the revenues are down. So I'm just going to put it all and I'm going to give it a report card score. So this is for the whole year, 129 million. And then 86.3 for the cost of sales. So that's running about a 33% profit margin. Without getting my calculator out, it's somewhere around that range. It's not leading for the cannabis sector, so I'm not that ecstatic about that. G&A, what I really don't like is the share-based compensation expense, 15.5 million. These people who are insiders, they think they deserve $15.5 million. Look, I don't think any of these people that work for these cannabis companies deserve that amount of money. I'm sorry to say, but you guys aren't running $1 billion enterprise where you're making $1 billion, $2 billion, $3 billion, and you're taking home like big amounts of profits, who do you think you are? That's my opinion straight up. Maybe I'll never get a job at Medipharm Labs or, whatever the case, but I'm a man of the people, and, I just got to give it legit. So that's what's up. Operating income, 6.9 million. Finance income before taxation, 6.75. So that's for the whole year. Operating income of 6.9 million, so almost 7 million. Not bad. Income before taxation, net income for the year, 1.1 million. All right. Basics EPS, 1 cent. So, if you put that all together and you compare it with all the other companies in the space, you're really talking, an A. But the fact that their revenues are going down this quarter, and then their cash isn't as big. They also did an adjusted operation income loss of 2.5 million for the quarter. On New Cannabis Ventures says they did, I think it was 32 million. So they're below Afrian now in revenues, and for their adjusted operational income, they're in the red of 2.5 million. So it's not very promising, the direction that they're going. And if you add up the shareholder equity, the reality of things is, that's my word. I may get a shirt one of these days. That's the reality of things. That'll be my slogan. And then Shaka, peace. I'm outie full 5. Really though, that's what's up. I mean, total comprehensive income for the year, 1.1 million. Yeah, it's not that pretty. For their quarter, because I don't think it's going to show me that just the quarter. It'll just show me the year, and then somehow New Cannabis Ventures was able to figure out the adjusted operational for the quarter. And yeah, so it's not going to show on this one. And I really think that, it's 33 million and a minus 2.5 million. In adjusted operational income, less cash, lower revenues. I don't know. I'm disappointed. I was expecting an A minus or something from them, and I don't know. I kind of get to give them a B. A B. Some people could say, I guess, a B plus, but I'm just disappointed with the fact that they lost revenues this quarter, and it just shows that my research told me what's up, and how Valens had better profit margins, and they have more technology going for them. They got 5 technologies, right? Medipharm Labs doesn't have 5 technologies. So yeah, I'm disappointed with this financials. I'm not gonna lie. It's not terrible. But when you put it up against Valens, it doesn't stand a chance, really, in my opinion. So now let's get to Village Farms. How many minutes are we in? 8:42. All right, so I'm going to do the timestamp for that. So Cannabis JV, Pure Sun Farms, generates positive net income of 36.5 million and EBITDA of 54.1. All right, so that sounds great. Sounds great. Usually what I want my viewers and subscribers, because I want us to be ahead of the curve, smarter, intelligent, just wiser in the market, right? Because with that, we can beat the markets. It's tough. If you're trying to judge in this cannabis market right now, it's tough. Like Tilray had a great week last week, but I said it last night. I said I think they're gonna go back down to like $5 to $6 to $7, and now they're like below $7, I think. And they're most likely going to go back down to like $4 to $5, $6. So that may be the time to pick up Tilray. But regardless, though, like, you're looking at this whole information, and they give out these releases, right? And they pump you. They're like, oh, it's so great, but then they leave out the negative things. This is a great year for them, but I just want to put it all in perspective so you don't get As Wolf of Weed Street says, honey dicked. So yeah, all figures are in US dollars unless otherwise indicated. So what they have done that I'm impressed with Village Farms VFF ticker is that they now have an interest of 57.4% in the JV of Pure Sunfarms, which is a very valuable asset in the cannabis space in Canada. So that is what's up. Company's financial statements in 12 months. All right, so produce sales were 145 million ish compared with 150 million. So they're down 5.4 million in produce sales for their vegetables, tomatoes, cucumbers, that kind of stuff. I've eaten their baby tomatoes. I like their baby tomatoes. They're great. So net income of 2.3 million US, which included positive net income from Pure Sunfarms of 16.3 million. So Pure Sunfarms had a great year. I think if they continue with that trajectory, and right now it may be tricky with things going on, but finish strong at the end of the year, they could definitely pull out ahead from their price, what they're at right now, and head into a better spot. But anyways, let's move along. This compares with a net loss of 7.5 million a year ago. Adjusted EBITDA was 0.9 million. Oops. So, including the positive contribution from Pure Sunfarms of 20.6 million or 27.3 million in Canadian funds. This compares with adjusted EBITDA of 2.6 million. So, they had better adjusted EBITDA last year. Yeah. I'm just not that impressed with what's going on in the cannabis sector. I mean, things are going to move in the better direction. Now they got the $100 indica blend, and I'm sure, say Ontario has 200, 300, 400 stores with a population of 15 million. They're going to be able to move a lot of product there. But at the same time, I mean, how much money are they going to get? Because based on the price of what they're selling it for in the online stores is like $360-ish. They're probably only going to get like $225 to $250 max. So even if they're selling 20,000, I mean, they're only going to get like 45 to 50 million, right? So I'd really like to see their cannabis sales like inch up to 100 million, and that's when they're going to really like start to really show their boss toughness in this industry. But yeah, I mean, they're getting notable mention for the biggest flower sales in Ontario. So net sales, which consisted entirely of dried cannabis, were 82.8 million. So as I'm saying, is 82.8 million. So this was not including the Village Farms portion. So I mean, if you take out the fact that Emerald Health is out of the equation for the most part, not out of the equation, but they're going to be less out of the equation. See, what's going to be really awesome is if Village Farms does get, say, 90 or 85% ownership, and Emerald Health is pretty much out of the picture completely, or like the ideal is 100%, right? So all-in costs of cultivation, including depreciation. Interesting. I don't think any of the other companies use depreciation, but they say 78 cents per gram. Gross margin was 76% compared with 69%. So you see, these gross margins are more robust than what you got going for Medipharm Labs. So I just want to share that. That's what people need to look into, especially. Another thing that people need to look into, the SG&A. That's what I'm going to flow through. Selling, general, and administration before Village Farms' proportionate share were 10.4 million. All right, so right on. 10.4 million, and that's not bad compared with 3.4 million. So that's not really that bad. Net income before Village Farms of 36.5 million. So I mean, if their cash grows by 36 million or something like that, I mean, it's all the net income thing, how companies do it. Oh, my light went out. You guys just have to see me in the dark, but it's all good. You get the legit content. So net income before Village proportionate share of 36.5 million. And EBITDA before Village Farms proportionate share was 54.1 million. So that's very attractive. So EBITDA is earnings before interest, tax, depreciation, assets. As I've said 100 times, only teaching people lots and lots of information on this channel. If you're not subscribe. Like this. I mean, I'm giving you lots of information that you're not going to get anywhere else, and I'm really giving you the information, I mean, that's rich and it's going to give you a step ahead in the future in the market. So that's just what I do. EBITDA before Village Farms. So Village Farms financial and corporate highlights for the fourth quarter ended December 31st. So, that's the end of the year. Produce sales were 33.1 million compared with 38 million. So less produce sales. Net loss was 7.2 million, which included the positive net income from Pure Sunfarms of 1.8 million. This compares with a net loss of 2.4. Loss per share was 14 cents US. Not sexy at all. Not sexy at all. Adjusted EBITDA loss was 8.3 million, including the positive contribution from Pure Sunfarms of 2.8 million US. So those farms, and it included the write-off of a portion of the company's hemp investment and its proportionate share of the write-down of hemp inventory, which combined were 2.7 million. This compares with positive adjusted EBITDA of 1 million. So, they're building it out. They're growing more cannabis, and when they have to expand, as they've been doing in the last year, it costs money. So, I mean, if things like really, they get really tighter, this company is going to be boom-tastic. But there's always the risk with what's going on with this Rona situation, as Jeremy from Financial Education likes to call it. So I'm just going to fucking flow with it. But whatever, is that a company could have a worker that had COVID and he gets tested positive or something like that, and then maybe Health Canada gets wind of it, and then they shut down the whole facility for like 3-4 months. Then they have to get rid of, like, say 5,000 kilograms or 10,000 kilograms. I mean, that's just harsh for a company if that was to happen. So it's wild west out there, and really the best assets right now are cash and precious metals and intelligence. That's a good asset to have. I mean, you got to be careful out there. Things are getting very, they're getting dicey, let's just say. Subsequent to quarter end, completed an underwritten public offering of 3.125 million common shares, plus the exercise in full of the over allotment option of 468,000 at a price of $3.2. So for 11.5 million Canadian. And as I said before, they increased their ownership to 57.5. So getting close to about 60 million. So net sales before Village Farms, which consisted entirely of dried cannabis, were 12 million compared with 4.7 million. All-in cost of cultivation was 66 cents Canadian or 50 cents US. SG&A before Village Farms of 3 million compared with 1.3 million. Net income 4.4 million. So just a lot of information going out there, but I just want to make it more precise, and I'm going to give it a report card score and summarize it, but so I'm not going to go through everything. EBITDA was 6.9 million, resulting in an EBITDA margin of 57%. That's very, very sexy. An EBITDA margin of 57% is very, very good. But EBITDA can be kind of misleading in a sense. It's not as though the company has more cash necessarily, because it's before interest. So if a company has loans, they have to pay off their interest, they have to pay off their taxes, and maybe their equipment depreciates, or they have to write down an asset. They have to write down the asset of the hemp facility, right? So they launched in Alberta, remaining its top selling brand, as I said before, achieving a 13.5% market share in the OCS, with 2 of the top 4 dried cannabis products by both dollar sold and kilogram sold, and the top selling dried cannabis products by both dollar sold and So this is the big deal. New large format 28 gram 1 ounce high quality cannabis product. So it's the Indica blend, Pure Sun Farms. Maybe it'll come up. I'll try. I'm not gonna waste 5 minutes looking for it. So Reddit. So yeah, this is what's up. It's in a big little baggie, and then someone puts it in the jar. An ounce, right? Indica blend. So that is what's up. Received approval from Health Canada to operate the final components of a 65,000 square foot state-of-the-art processing center located within the 1.1 million square foot Delta 3 greenhouse facility. The expanded processing area will enable to generate additional product cost efficiencies, further elevate the quality of its products, expand its product, and increase its processing throughput. And it'll have a processing capacity of 35 kilograms of biomass annually, and is being designed to satisfy EU GMP. So that'd be awesome if Village Farms get EU GMP. So what I also like about this, they talk about 2.0 continually, like they're going to focus on that at the end of the year. I don't know what they're going to do. I mean, it doesn't seem as though they're going to have a lot to offer as far as that. I mean, as Jason likes to say, it'd be really cool to have tomatoes with CBD or THC in them. I mean, hell yeah. But I don't think that's happening anytime soon. Expanded its credit facility with its existing lender to $59 million, including accordion provision of $22.5 million. So I like that. They have flexibility with their credit facility. So that is a nice thing. So Emerald did not take any of its 40% commitment under its supply agreement. So, that hurts Pure Sun Farms. They just have such a complex business right now. So I'd like it if they just, had it more straight. They got rid of their tomato business. I'd love that. I think that would be better for them if they got money for that. And I don't know. I just think that. But I mean, maybe it's a good hedge, I guess. If cannabis doesn't work out, they can still do the tomatoes. But, they're losing money on the tomatoes and the vegetables. So, I mean, if you were starting a business and you knew you were going to lose money by working, would you continuously build that business? I mean, it doesn't make a lot of sense to me. So, I mean, companies that want to continually do business to lose money, like to spend $2 to make $1. I mean, doesn't make any sense. It's not logical. Anybody who's logical like me understands that's not very intelligent. But I'm sure they have their reasons, and they've had the business for a long time. So I understand that. And there's also a thing such as inflation. So for all we know, tomatoes could cost like 2, 3, 4 times in a few years. And then these profit margins on tomatoes are going to be just as good as in cannabis. So produce sales were $33 million, and then cost of sales were $37. So that's what I'm saying. I mean, it costs you more to make. Then you got to add the SG&A. So they're losing $8.3 million in adjusted EBITDA and minus $7 million in net income. So it's not good, not good, not good. It's nothing else I can say. Consolidated sales was $38 million. So that's when you add up the cannabis sales. So that's in US dollars. So don't get it twisted. US dollar is pretty strong. It's about 1.4, right? It's close to 1.5. So you're talking some pretty good revenues. I mean, you're almost talking 60 million quarter. SG&A 6.5, net income loss 6 million, adjusted EBITDA minus 13 cents EPS. So got a little more to cover. So where would it say? So this is where it says they sold 1,100 kilograms at an average selling price of over $3.59 per gram. Additionally, Pure Sunfarms recognized $8.1 million upon the completion of the settlement agreement with Emerald, which represent 2019 wholesale. For the period, sales were 100% wholesale to other licensed producers such as Emerald. So, yeah, they have a very complex financial system because they have two different businesses. So, I'm just wrapping my head around this, and I've been doing this for a long time, reading these financial numbers, and I really feel like I'm a freaking cannabis investment guru in this space. As far as reading these financials, I mean, I'm going through it deep. Pure Sunfarms net income for the 3 months ended December 31st was $4.35 million, up from $1.8. Adjusted EBITDA was $6.9 million. So that's for the 3 months. Some of this is just repeated, right? So I want to get to one part where it kind of breaks it down right here, right? So, so this is how it breaks it down. Okay, sales, $33 million for produce, $4.98 million for Pure Sunfarms, and then hemp was $69,000. So the hemp is really, really low. I mean, how much revenue are they going to get in 2020 for hemp? I don't know. They'd be lucky to get a $1 million at this rate. So, I mean, I was expecting them to get such as like some numbers such as 5 to 30 million. And I guess it's just not, there's just too much hemp in USA. So you add up all the cost of sales. Excuse me, they spent $2 more million, like 2.3 more million than their sales were. So then you're adding the SG&A of 6.8 million and provision for recovery of income taxes. So that's what also helps them out. So, but they had to do stock compensation, loss on write-off of investment. And so, I mean, if you add up those, if this provision for recovery of income taxes, if it wasn't there, I mean, you're talking minus 12 million. I mean, that's a lot of money. So, especially in these tight times in the marketplace. So, adjusted EBITDA. Yeah, so, I mean, I'm really not that impressed with these numbers. On their cannabis side, they did do earnings per share. So, it looks as like, okay, so 5 million pretty much. Cost of sales, less than $1 million. SG&A, so I mean, they're spending close to about 2 million to make 5 million in revenues. And then provision for recovery. So if you make money, then you got to pay income taxes. I guess that's what it's trying to say. So net income of 1.8 million. So that's close to about 30% or so, maybe 35% of their net income. And then you're talking about, 55% or so of their EBITDA measures. So it's pretty good for their whole, but their hemp, they lost 4 cents. So, I mean, based on this for the financials, I mean, it's a earnings per share for the cannabis side. So, I mean, if I'm just going to say the cannabis side for these 3 months, I mean, there's an argument, I guess, to say B plus, I guess. I mean, it's very low revenues, but they did grow more than that, and it's all confusing with the whole situation with Pure Sunfarms. But for the overall business, I mean, I think it's definitely in the C's. It's like C plus, maybe C. So that's just what I feel. I mean, it's a very complex situation with Pure Sun Farms and Village Farms and all that. So yeah, I mean, I'm not really that disappointed with the revenues. It's just I was hoping that it would be like 10 to 15 million. So I would have given them probably like an A minus or A if they would have done something like that. But because it's lower than what I thought it was, you know, I got to give them something like a B. So I'll give them a B. I mean, there's definitely an argument that they can be a B plus, but the revenues are low, so I have to give them a B, especially because they had more revenues last quarter. Now let's look at cannabis ranking. So I don't think they make the list anymore. I think they got kicked off the list. Yeah, so they've already updated this, so they're not even on the list. You need to make 10 million. So I don't know. I don't like that much. So, but you know, they sell a lot of this indica blend in 2020. Their revenues are gonna boom up, and you know, it's gonna be good. So, anyways, that's pretty much what I have to say. A B for Pure Sun Farms VFF and Medipharm Labs, you know. So I covered that all. I hope you enjoyed this session. If you haven't hit that like, hit that like. If you like this content and you want to see more of this content, let me know in the comments. Like and share and subscribe. And until next time, shaka, peace. I'm outie 45.